Hello, War Room ICS number 12.
Hola.
Hola, hola. How are you? How are you?
Good morning.
Good morning. How are you, Alan?
Good evening over there.
Yeah, good
I'm good.
evening.
Yes.
Excellent. Perfect. So today what we're going to do, we're going to keep going with our coaching, intense coaching. And today, as usual, we're going to start with a quick view on the S&P 500, what to expect by next week. And we're also going to take a look at multiple companies. We're going to talk about, for example, we're going to have today Amazon, Bank of America, Merrill Lynch, JP Morgan, Nike, Cisco, Coca-Cola. All of them, we're going to review the same strategy slowly. We're going to cover trend Fibonacci. I will also add, of course, Wolf Wave on the third point. And second, we will discuss price rotation. We're going to take a look at monthly when we have monthly available, mainly weekly, monthly. Those will be the charts that we will study today. Okay.
Okay.
Perfect. Now I'm sharing right now my screen, and we're looking at the S&P 500. One more time, we're going to take a look at what takes place here. We're on the 4-hour chart. Do you see the chart, the S&P 500?
Yeah.
Perfect. And what we want to pay attention all the time is how, first off, it's not a secret. We do have, in fact, a bullish trend. This is what we have. There's an obvious continuation, can go this way. And unless we have a break, open and close, probably on this area, which is between the 3140 all the way to 3150, we won't have anything to be concerned. And there's a continuation to push higher. Every time that you're looking at buying a company, okay, we were talking now, it's initially looking at a company and deciding where if you want to buy or not. You have to decide where is the price. What is the price doing? Is the price on a bullish momentum or is the price on a sell momentum? And you can do that. We tend to do it with the 20 that we use mostly on indexes. That's the way they do it in the US, the big boys. And then on equities, we're going to take a look at the 50. From time to time, you can always plot on a monthly chart. You can always plot the 20. Okay, very important. Now, as we have the 20 here on the index, we see that it has found support somehow all the way since it started climbing back. But you can see also going back all the way, you see all the support we have seen, we have experienced on this particular moving average. Now, going back to trend Fibonacci, you have the pullback here. You can argue two things. There's a pullback on this candle, and this is a pullback from this transaction that we have the smart money pushing prices low, creating a higher low, and then pushing high. Now, if that's the case, you want to use that pullback, this pullback, as your entry to start your trend Fibonacci. And from this point to this, then you will draw your Fibonacci. Let's do it. Okay?
Okay.
Take the Fibonacci tool from this low, and we push higher. That's where we have it. Now, I'm zooming, and you can see confluence between the twin exponential moving average and the 38.2% Fibonacci, 3158 and same, 3158.
Yeah.
And what we see now is how prices reversed. Initially, I mentioned this to the war room. Take a look at the 4-hour chart. This candle was reversing. It came all the way down, pushed back up, closed. Then another 4-hour chart. This one, the second one, we see the fight. You see the fight, but at the end, the bulls are winning.
The bulls won. Yeah.
The bulls won, and then look at precisely this one, the last one. See how it opened, because this is the open here. It opened above the close of the previous one.
Yeah.
It did play with creating that tail. So basically what it did, it's some point it pushed. It looked like a red candle.
There was another fight,
and then push back up and then give us this body for the close on Friday.
Bullish again.
Yeah. Exactly. That is telling you, and we can easily have the next 4-hour chart, 4-hour bar, 4-hour candlestick do another visit here, and then doing the same, the continuation. Because now at closing at 31.72, what the market is telling you is that we have protected, in fact, the 50 level, the 31.50. And as I mentioned, let's see if you remember that I told you it's very important for us by Friday to have a close above the 31.50. Do you remember that I mentioned that during our sessions?
Yeah.
Okay. You can always go back and check on previous sessions, probably Tuesday or Wednesday. Yeah. That's when I mentioned that. For us to keep the momentum into the Christmas rally, we want to have by Friday, we need to close about 31.50. And in fact, we did that with 22 points.
Which we did, yeah.
Above. So again, more evidence in our favor. More evidence in our favor. Now, removing all this, let's finish the trend Fibonacci. And as usual, you can do this in a simple way. Just going to show the area. We have all the way here, this level to here. And then I take that.
From 0 to 100.
Exactly. I take it from the 38 all the way up. And here's where Christmas Friday will take us.
Previously,
yes.
Previously, the number was at 32.20. Now it's at 32.25. So,
correct.
Which is a good thing.
It is a good thing. So you have seen how slowly all the numbers are coming into one thing. We are on a bullish leg. That's something we have to consider. There's technical evidence. We also see that there's some fundamental evidence with finally they're discussed that there is a deal, deals on the table. The Wall Street Journal says there is no deal, but it's not that. It's basically little details on the deal, but there's deal on the table. They're just fine if waiting for the signature. And going into 2020, which is, as we know, election year, presidential election year, well, of course, there's interest on one part to make sure something happens and that everyone is happy going into the beginning of 2020. So, but what matters to us, because we have call options, is that this rotation ends. And now when we look at a rotation and push based on trend Fibonacci that can take us 50 points on the S&P in about a week, it's a lot. It's really a lot. Now, if you take in consideration, like in the 4-hour bars, we take 20, it can take the full week and we can have the plus 40, plus 50 points on the table. Because on one single candle, you can see here, we have 22 points. So it's not something that we're expecting that cannot happen. I mean, there's evidence in our charts that we can get there, okay? And this is what we have. Finally, based on this information, based on this pullback, because I can easily take it also from this level, which is what I did before, and that takes us to 3,200. But if I take in consideration the previous pullback, which is the real entry, you see how you see this pullback?
Yeah.
And then the projection. When then I know, based on this, we see all the confluence, 38.2%, and again, 20 exponential moving average. And this is where we end. And because this is a 4-hour chart, I can bet by Wednesday, we will know if we're going to hit this target.
Okay.
Because it's a 4-hour chart. If you consider why I say that, take the area. I'm just going to go back with this to have an idea. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 17, 18, 20. So that's 24 hours. That's 80 hours. 80 hours. How many days is that it? 4 days.
4 days.
And that will be next week. So we
next
do
week,
4 days.
Thursday, Monday to Thursday.
Yeah. So Thursday. And what is Thursday? The 19th. When is
19,
our expiration of our call options?
20.
20. We have time.
Yeah.
So you see all the information, everything that I look at to have a calculation when this will take place. About 80 hours. That's what we may need, about 80 hours. And those 80 hours equal 4 days for us to be hitting that target. And of course, the fact that we get there not only will show you that, of course, our main concern is making money or reduce risk on the positions we have. Those are the two
Mm-hmm.
ways. But also
Mm-hmm.
shows you that you can apply these that you're learning.
Mm-hmm.
You can apply these, it works, and it's proper guidance.
Mm-hmm.
And you can use this. And that
Yes,
will
sir.
be because now into 2020, you will be armed with all the necessary technical skills and fundamental skills that you already know in how to do
Yes.
a better selection in your
Yes, sir.
in equities and calls and puts.
Uh-huh.
Anywhere it goes, you understand what kind of research you have to do and where to look for the best vehicle and opportunities. Okay,
Yes, sir.
perfect. So we have this. We're gonna finish our S&P look, and this is what we expect for next week. Perfect. Now let's go and work because we have a few things that we covered.
So,
Yeah, go
so
ahead.
is it still valid to set the sellout target to 100% profit for all the trades that we're in, like the
Yes.
DOCU,
Yeah, correct. We are
Costco,
looking. Yeah,
Uber, and Snap?
correct. For example, in the case, and let's go step by step. On the case of snapshot. Snapshot can easily make us a move and give us a 200%. That can be a scenario. Basically,
Uh-huh.
because as you have seen, if you think, for example, in the case of, let me just go to the chart. Okay,
Mm-hmm.
uh, here we go. Okay,
Mm. Are you sharing it?
let me share. Let me share it with you. And do you see my screen?
Yep.
Okay, that's Snapchat. The final price, closing price was it made a high of $15.18
Mm-hmm.
estimated. So I'm gonna take a quick look at that option. See what we are with that option. Snap. It's at 17 cents.
Mm-hmm.
It closed Friday at 17 cents. Okay.
Mm-hmm.
So I got it at 8. Do you remember what price you got it?
I believe I got it at uh I'm not sure. I have my my Thinkorswim closed right now.
Yeah, that's fine. So you think probably was 7 or 8?
I think I got it at 8.
8. So if it's at 8,
Yeah.
you're at 100%.
Oh
You
wow,
see?
I didn't even look.
You see, you
Yeah.
you see, you don't care anymore, Alan. You made 100% is like, oh yeah, well, one more.
Yeah. Yeah. I didn't set I didn't put a sell target because I went by your recommendation that we wait
My
until the
guidance,
19th.
yes,
Yeah,
yes,
your guidance, yeah, that we wait until the 19th because it has a high potential and probability that it's going to go way over 100% profit.
correct. And like I said, my guidance is based on situation. And as we reflected yesterday, because the call that we had yesterday was important for me. I think it was important for you.
Yeah.
Is the reflection how we will improve this. We're going to always keep
Yes.
improving. Now, this
Yes.
evidence in how I portray to you why I took the snapshot trade,
Mm-hmm.
again, is evidence that from the idea to the execution, it works.
Yeah.
As I told you, I needed one thing to balance out potential situations. And that's what Snapchat is doing right now. It's already at
Mm-hmm.
100%. Because in my case, I got it at
Mm-hmm.
8. I mean, I didn't look at it because I look at these and based on my timing. But look at
Mm-hmm.
what the stock did on Friday at the end of the day. 4.43%. Let me one moment. Share with
Okay.
you. Let me put it on your screen. Do you see it now?
Yes.
Okay, last sale,
17
17.
cents.
Now, this is something that we have to check on level 2. It says 43 cents.
Yeah.
So there was a gap. But the question is
Yes.
how many were sold at 43? That's always the question.
That was at the market open yesterday.
Yes.
It went up way. It's like an impulse reaction at the market open, but it quickly went down.
Yes. Now, if
Yeah.
that's the case, and the most important also always to track notes on these exercise of trading options. Did they have sell options? I mean, if something went out at 43, that's a question.
Yeah.
I'm more guided when I see these big jumps. I don't really trust them. I don't
Right.
think there's nothing there.
Yeah.
The
Yeah.
volume,
It was just an impulse.
exactly, and the volume, but
Yeah.
also the opportunities here. A couple things always to keep in mind. And remember, you already know this information. Look at the bid and the ask. The spread is only 1 cent.
1 cent. Yeah.
Look at the volume on Friday,
Mm-hmm.
7,139. The net differential was 10 cents. So it went from 7 cents, the day low was 9 cents. The open was 7 cents. The previous close was 7 cents. It opened at 18 cents. The bottom line here is that this thing already made 100%. That's it. You see? That's simple.
How do we compute the net?
The net it's computed by the by Nasdaq. What it's
Okay.
telling you is that the net that it went up was 10 cents.
Okay.
But again, if you look at the previous close, means this is the close on Thursday.
Yeah.
Okay, the close on Thursday was 7 cents.
Yeah.
We know it went to 5 cents. It probably went to 2 cents. Let's say you get this one at 5 cents. Right? Right now, you made already 200%. We got it at 8. That means that this has to be calculated somewhere around 100%.
Yeah.
But here's the trick. We're trading the 1550 call.
Yeah. Yes.
And what I told you, see the power? By Friday, no news. No news, just the news of the market. And what is that? Price rotation of the index, of the S&P 500.
Yes.
It went itself 4.43%, giving us, Alan,
yes,
a big chance to be in the money one day before the expiration date. And that's the magic. That's the magic. So like I said, it's different situations.
How do we do that? Yeah.
Different situation. Well, it's the guidance, is the picking up, finding this, because I'm pretty sure no one in the war room will expect me to say, hey, let's trade snapshot.
Yeah.
What for?
Yeah.
But I found, but this is the thing. It's one of, I think you saw one of the, last Friday, I think it was Ross Gibbons from the Insider Report. He sent out 2 recommendations.
Yeah.
And in one of the recommendations, he says something that is super truthful about what we do. Most of the time, a lot of the portfolio we trade, some of the companies you heard of, but you will never expect to make that much money out of it. But a lot of the names that you see in the Insider Report, you have never heard of those companies ever in your life. And they're there. But the reason why we get to them is because there is activity, there is insiders activity, and that's how we get there. Okay?
Yeah.
So we have at this point 17%. There's one also. I'm going to take a look at this one because I want to go to the charts. I'm going to take a look at the DOCU one.
Yeah, that DOCU didn't react to the index.
Didn't react well to the index, but it's not out of the career because, see where we are with this. Oh, it went to 70. This one, you see, it did react to the index. It did
a little bit.
No, pretty much.
But it didn't affect the option price that much, or did it?
Well, it was 30 cents. If you think about it, okay, let's look at perspective real quick, okay? Yeah. The close on Thursday was 40 cents. It opened at 38 cents on Friday. It went up to as high of 80. That means that on the same day, you made 100% if you were trading this option, okay? Look at that. In the same day, 100%. The volume, 624.
But we are in that trade though.
Yeah, we are ready, but we are at a higher price. I think 150, 145.
Yeah.
You see?
Yeah.
Now, I think I remember that you said, Jose, if it goes to 70 cents, I would buy more. Now, it went to 70 cents. Of course, we have a different guidance here, but it went up 30 cents by Friday. Now,
Yes.
again, what's the case with DOCU? This is when the market, although we have everything in our favor because DOCU hit earnings.
Yes.
We have everything in our favor. The market does a gyration, rotates a little bit lower. But look at what happened. Remember, we're buying the 75 call again.
Mm-hmm.
And right now we are at 73.72.
Mm-hmm.
We are almost $1.70 from our target.
Yeah.
And
Yes.
if, and this is what you have to go and, like an engineer, understand the pattern, see the capacity of the stock. On Friday, based on the price action of the index, it moved up 2.43%.
Yeah.
And you know already what kind of leg are we expecting and what evidence we have on the S&P 500. Who can say that we don't have a chance to, an opportunity, a mathematical opportunity to have another 2.43% in the next 4 days, get to $70, $50, $75, and be in the money before expiration day. And that's
this DOCU, this 2.43% is just 1 day, right?
Correct. That's just 1 day. And
that's just
listen,
day.
And it's not even 1 day. It was in a few hours because during the first 3 hours, I'm positive that this was down. This stock was down.
Right, and it's not even Christmas rally yet.
Exactly.
What more starting Monday with the start of the Christmas rally, right?
And that's exactly why I said stay put. Because we're about really, this is what we are about to see, experience in the war room. It's taking an option to the end, almost the end of it, and be in the money by expiration date.
Before a day before.
Exactly.
Yes.
And that's what we want to see here. And yes, we're paying the market to do that. But because if we do that, this is the whole thing, like what I explained to you, and I'll take a little bit more time so we have this on record. This is what I told you. The trade of Costco and why I picked Costco, and yes, it's not working. I get it. It's not working. There's no way to sugarcoat it. Plain and simple, didn't work. We see what we can get out of it. But no one will ever offer you guidance, anyone in the US or Canada, that will tell you that you can take an option from 30 cents to $17. No one except me, period.
Yeah.
And I see it, and I know it's there, and it's waiting for us. And not one time, multiple times. I saw it again with Roku, from 14 cents to $5. And it happens. It's real. That
was just 1 day.
1 day.
13 cents.
Yep. Yes.
To $5.
Yes. I think
that was a gap move.
No, it wasn't a gap move. The market went down. It crashed. DOCU retraced like 10-15%. It wasn't a gap. It was real. Let me do something. Let me do something that I have with you, because I'm positive that I save it because I wanted to have the evidence. Let me just go to my GIA. So this is what I use to save my screenshots. Okay, I think I have Roku. So you have it. Oh, I think it's this one. Ah, there you go. Sorry. There you go. I got it. Okay. See this. Previous close. 17 cents. Open. So on Friday, it was 17 cents. Okay.
Yeah.
When it opens, it's already $1.34.
So there was a gap.
No. It traded. The last sale. Look at the last sale. Okay. Okay. This is what I want to portray.
But the previous close was a Thursday, which is 17 cents.
No, that was Friday. That was Friday.
Friday.
Yeah.
Okay.
That Friday. So that's the Friday. Okay. Let me show you.
Like yesterday?
No. This is the first week of December. Okay.
Oh.
So the expiration. Okay, so on November, okay, on November 29, the close was 17 cents. Then market opens as I instructed everyone to have our positions. Remember what we did? Do you remember when, if you look at your records, remember you bought the Netflix option between Thursday and November 28 and November 29, the last week of November. You bought at 98 cents, 94 something. And then as soon as the market opened on Monday, between Monday and Tuesday, we were trading to make 100% on the option. That option, and that was the week that I said, okay, probably keep those till Thursday, and I told you sell for 100%. It went up to 240 maybe, and that's it. It crashed.
Yes.
Daryl also made a lot of money on that one.
Yes.
So, well, that's the same thing. On November 29, this option was 17 cents. When the market opened on Monday, it opened at 134. It went all the way up. The last sale of that day was $1.76. So if you take that,
but the day high was $5.
That's exactly what I wanted you to see. But then you take $1.76, divided 14 cents. That's 12 times. That's 1,200% just on this. Now imagine $5 divided in 17 cents, 29, 2,900%. And yeah. So this is real.
Yes.
This is why I record. This is why I save it, because I pick a winner, a champion trade, my favorite victim for shorts, Netflix, yours too. Meanwhile, Roku was making 1,000%.
We gotta keep Roku. We gotta keep Roku.
You have to keep an eye on Roku, and remember, as soon as you see the S&P up there, what you're gonna do? You're gonna look for the victim, Roku and Netflix.
Yes.
Okay. So so I spend some time with you on this because this is important. These things are evidence. Again, for good or bad, for what it's worth. The Snapchat trade. What's the Snapchat? Uber, of course. Uber is
Uber.
It's behind. It's 10 cents. We bought it at 40. Who have thought that we actually needed to buy it at 10? Volumes there, but then again, look at what is happening. We bought the 30 call. We are still at $1.60. At $1.60. Right?
Yes.
And we still have the rally in place. So that can give us that push. And if that push is correct, based on two other evidences that we have, then who says we are not be looking to sell either a break even or for profit? We're still in the race. We're still in the race. Okay.
So right now, don't put a sell target limit.
No. We're gonna
limit
go
on Uber.
No, we're gonna go step by step. We're gonna go step by step, see how much we can squeeze this one for. And remember, all this week, as soon as market opens, we are in front of our screens working. It's a busy week for us.
Yeah.
It's a busy week. Okay. Perfect.
So don't put a sell limit on all of them right now.
Not yet. Let's see how much we can squeeze to the upside.
Okay.
Okay, but we have to pay attention. So we have to be, when trading starts, you have to be open and see what's moving, because we need to know what's happening, how they're moving.
Okay.
Okay, perfect.
Okay.
Now, I don't know how much time we have on this one, but one thing before I jump to examples that we're going to analyze today, remember the trend Fibonacci that I showed you about Snapshot? It's paying out.
Yeah.
It's already, clients got, I think the paid war room members that we have in Europe, I send them these to use the CFDs, which is how some of them are trading as well. They don't buy the equities directly. So I told them they got somewhere here and they're already in the money $1. That's a lot.
Oh, that's good.
Yeah, that's good. They're very, very happy. And there's still plenty upside for them.
Yeah.
So the information I explain, I share with you guys, works on different trading vehicles. That's very important. Okay.
Okay.
Now, let's go into new examples. First, we'll take a look for Amazon later. potential that I see in 2020 that you have to master. We have 10 minutes to go. We're going to take a look at one company that I like a lot. See, we took out the weekly. I'm going to take it from the weekly. Nike. Okay. A little bit of fundamental. Listen, we're not looking at insiders. We're looking at to improve your shorting skills and have some understanding of why we may have an opportunity to play these companies to the upside. Okay. Of course, a pullback is expected, but those pullbacks will be only opportunities for you to go in. Now, how we determine those? First, I'm going to take a look at price rotation. Easily, as I see these points, I see that these points here, they used to be a double top. Of course, it worked one, it worked twice, okay? And then you see price reversing. So it tells me that right here, I have an important value zone, okay? This is just taking information somewhere from 2019. I can easily take more information, but this is all I have here. Just with this information, we know that I have an opportunity.
Are you sharing it to me?
Yeah, let me share with you. Okay. You see my screen now?
Yeah.
Okay, so I was to say Nike. We had here what they call in technical analysis 101, double top, and it worked perfectly. 1 and 2. On the third time, small pullback. Everyone thing is going short, and then goes up. Perfect. Okay, then he did the same pullback, and then now it's go up. What we can expect is that these values on here, over there, 1 and 2, created an important value zone around this price, somewhere between the 91 and the 88 level. You can see that just by looking at the chart. You don't need anything else. So if I take, let me remove my pencil, take this, 1, 2 points, I have a strong level at 89. Now, what you need always to measure is what is the range that was traded? And there are 2 ways to see that. You can see a full extension, which is what we have at this level, at 77. Or you can see the middle range. And judging by the middle range, we have this point, measure 128. That will be around 64. 58, 54, 59. Estimated 59, so 59, the middle range, somewhere here. That will be your middle range. Okay, let's see how much we have here. 60, 67, could be 63.
What number are you looking at?
I'm looking at the range from this point to this bottom. It's 127 points, $127.
It doesn't say on the numbers that's there though.
Yeah, you see there's a number 6 and then it reads like 1,276. That's in fact 127. You remove the last number.
Oh, okay.
It's because of the MetaTrader platform that I'm using.
Oh, okay. So 127 points, not percent.
Points, dollars. That's what it is. Okay.
$127. Okay.
Okay. So my middle range will be around 63.50 estimated. Now, what I do after that? Do you see the range we have? Okay. So this is the range, and now when prices break to the upside, I need to determine how high they will go. So I take the shapes, the rectangle. Okay. This is my zone. This is my area that I'm working with. I repeat. And I know. And projection. I'm going to change the color. I'm just going to use green to make it target, the money target. And there you go. This is my area. Let me just double check that I have it correct. 124.
It didn't change to green.
No, this is the line. This
is
the line.
The line. Okay.
Yeah, the line. This is my target. So I'm looking for a final target on this area that I'm working with, this rotation, about having Nike at $102. That means that from $97 to this point, that will be another $4, almost $5. We're looking at a 5% increase for Nike. Now, this is how I calculate price rotation. The price rotated for the first half, almost 2019, between $89 and $77. You can see it here. The third time, in the presence of the resistance of the critical level, it retraced and pushed higher. Now, prices consolidated on this new bullish rotation. So once prices are up here, your final target is this line, which is all the projection from the previous rotation that the equity had. Of course, it's not going to go in straight line up. This is basic. So what it will do is probably it can easily in January do this. And then
after reaching the target.
Well, it could be that it doesn't move. It all depends on the stock.
Okay.
But yes, let's say with the Christmas rally, it reached the target. Are you gonna be a buyer at $102 for Nike?
For put, yeah.
For a put, oh, there you go, beautiful, beautiful answer. I love it. For a put, yes,
Yeah.
but for the equity,
no,
because you know you are at a critical level, which it's the completion of the previous rotation. This level now rotated here and is completed. It might go up a little bit more, but it cannot go up that much.
Yeah.
So it has to create what I call the liquidity window, which is the concept that is the next concept after price rotation. What retail traders call support, and I said this before, the market requires, you see this, okay? It goes up. But in order to do this, it has to move this way. Every time that you see a correction is an opportunity.
Or consolidation.
Exactly. It's an opportunity that the big players are taking, removing a little bit of risk, and they have to do that. The professionals, they have to sell the stock for you to think that it's going down, so you buy.
Yeah.
Your buying is nothing more than liquidity that you inject into the stock.
Yeah.
And then it goes up. Because without Nike retesting this zone, and I'm not the only one understanding this, but without this, there's no chance to break this level. So the stock has, by force of nature, has to come back and be attractive to you, to retail traders. It has to be attractive also for mutual fund managers, that they will come and say to their clients, oh, we're cost averaging our position on Nike. Sounds super professional, right? And everyone's like, yes, we're cost averaging our position. Yes, do it. We're going to get a better entry. But in fact, you're just following the plan of someone else with a lot more money than all of us, giving us sort of an opportunity for also them to take out their positions. And that's what is taking place. So when you reach this level, you will be looking for the put. But when Nike get closest to 91 or 89, you will be looking for
a call.
That simple.
Yes.
And you have this exactly in front of you. I didn't need any sophisticated earnings per share analysis. I didn't need it yet to look for the insiders, which I'm sure they're somewhere around. I only needed a basic projection, understanding the price rotation. My price rotation in 2019, $89.77. When it broke, I project that area to the upside. And that's it. That's the calculation. We're about to finish this. So this is your recorder number, ICS. Yes. And we're going to take a 10-minute break and we come back for the second session of the day, the back-to-back. Okay, all right?
Okay.
Thank you so much, Alan. Let's continue.
Thank you, Jose.
You're welcome.
Okay. Thank you. Bye-bye.
Bye-bye.